Property Partner was really born out of the idea that that buy-to-let investment of having, call it 1 to 5 properties themselves. And those constraints include things like large capital outlays to get started, very difficult to achieve deep diversification. Every property that we buy gets wrapped in a special purpose vehicle. So as you invest in that property, you become a shareholder in that SPV. You can invest as much or as little as you want. We've acquired and funded 110 individual property investments. And that amounts to £135 million worth of property. And we complete on the property transaction about trading exchanges. With all humility, we think that ours is a very differentiated proposition to the other examples that are out there. Every single trade that happens on our platform to the FCA, as well as European regulators, is that liquidity is a huge drawback to the initial investment. We got into it because the yield was significantly higher than on residential property. The yields that our customers are earning from student accommodation are north of 6%, and that's a cash dividend yield. The range of yields on our residential portfolio are more like 2% for our London property, which makes up about half of our residential portfolio, and going up to the 4 to 5 range certainly proved popular in a climate where people were more sceptical about the capital growth prospects in the immediate term. Where there are opportunities for sale, our property team will generate a recommendation and put it to a shareholder vote. But there's a backstop for investors. If a shareholder vote doesn't come around, there's a 5-year anniversary, at which point we will, in step 2, we would sell the property and return the funds. As soon as the property transaction completes, that property gets listed on our secondary exchange, and those shares are all available for sale in it. It's not a bulletin board where you can post. The average dividend yield across our entire portfolio is just north of 4%. And as I mentioned, it's a cash dividend that's after even the corporation's tax. Our largest has got 42 individual flats, and some of our smallest might only have 5 flats in them. Recently, one of the things we did this year for the first time is we launched a fund. We've called it the Opportunistic Fund, where we've gone to our customers and said, there's no property behind this, just invest in the fund, give us the cash to transact fast, where we will be able to extract a better deal, particularly in choppy markets or in distressed situations. So we launched the fund and we closed it 3 weeks later. We raised £2.1 million. That's slightly larger than our run rate for individual fundings have been in the last 3 months.